You are listening to chartingwealth.com for Tuesday, the 20th of October, 2015. We always start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund. It tracks what's going on in the whole market, and the whole market is going up. In fact, it was up a little bit today, not a lot, just 0.10%. We always study, however, two charts. We look at the 2-day chart, which is our big chart, and we look at the half-day or the 4-hour chart, and we see that the total market is moving up. It's risen above the purple line that we drew quite a while back. It had been a ceiling on the market for quite a while. In fact, as we look back, we can see that that was a ceiling on the market all the way, actually even before the 17th of September. But that's where we started drawing it from. The market hit it a couple of times, stayed below it, and then moved up above it over the last 2-day candle. If we drop back and look at the 4-hour chart, we see that the market moved up substantially on Friday the 16th, and then over the course of Monday, it moved, really just sort of topped out again in the morning, moved up a little more in the afternoon, but overall it was only up 0.1%. So is it going to go much higher? Well, the MACD, which is the moving average convergence divergence, crossed over going up on Friday morning, and it is still barely above the red signal line. The derivative oscillator has heated up. It is higher. How high will the market go? Well, we've watched the Bollinger Band, which are the volatility bands, drop down to just above where the market has risen to. So we shall continue to watch. It could have legs. It doesn't appear to have a lot of legs, but again, markets continue to go up, and it's in an up position on the 2-hour chart now. And again, if we look at the 2-day chart, it's in a strong up position, and the MACD is continuing to diverge. It's not coming together at all on the big chart. So again, hopefully, if you were looking at the charts, one thing we talk about over and over again is when the short chart has been going in the opposite direction of the big chart and then rolls back over to follow it up, that's typically a very good time to get in. And you would not have done too badly so far. If you would have gotten in somewhere around there, you would have been up a little bit for the day. So we'll continue to watch what's going on. Now that is the big chart. And that is the big chart on the total market. Now let's go to a bit smaller market index fund. That would be SPY, which is the Standard & Poor's 500, another exchange-traded fund. It tracks the stocks in the S&P 500, 500 big stocks. Well, it crossed over on the 2-day chart back on the 5th of October, has continued to move up, a little bit of backing off around the 15th of October, and then the 2-day candle for the 19th is showing, again, another move up, although it was only 0.5%. So again, not much of a move up over the course of Monday. If you look at the 2-day candle, it looks a lot bigger than that because it also takes into account what happened in the market on Friday, because it's what? A 2-day candle. Now let's look at what happened on the 4-hour chart. We can see in the morning, the market actually was down, but in the afternoon, the S&P 500 heated up and again was up just a little bit. You've got a very narrow range between the signal line and the moving average convergence divergence indicator. Those of you who are new to the broadcast, because I know we're picking up new people all the time, if you don't know what the MACD, M-A-C-D, that is the moving average convergence divergence, it is the indicator we prefer to use. We keep it very simple here. Got a great indicator that helps us in tracking if the market's going up or down on a particular index or commodity or stock. And that is the one we like to use along with the derivative oscillator. You can look both of those up at Investopedia. Just do a Google search. You can also go to our website, chartingwealth.com, and see our teachings and studies on them. But the moving average convergence divergence is still above on the 4-hour indicator. Not much. But again, we look to when our moving average convergence divergence flips over, and when we see it reverse at about the same time the derivative oscillator reverses, and it's going in the direction after a backing off back in the direction of the big chart, which is currently in an up move, then that typically is a good time to consider getting into a virtual trade on that commodity, stock, index, whatever it might be. Whenever we're going in the direction of the big trend, that's a good sign, particularly when the small trend has been going in the opposite direction and now rolls over back in the direction of the uptrend. So we'll continue to monitor that. It doesn't look like there's a lot of legs, however, on that short chart. But again, what we go by is what the indicators tell us. And currently the indicators are not giving us a strong signal, but they are nonetheless giving us a signal that it continues to move up. I am concerned about how much the volatility band, and that's a dashed blue band on our chart, has come down to meet the up move, which means these volatility bands show us that the volatility is reducing, and the charts don't tend to rise much above the volatility bands or not much above them for very long when they push through them, if they do. It topped out on that today. We can see a green wick on the top of the candle for today's candle, and it did move all the way up to the volatility band. So be aware of that if you're looking at getting into any virtual trade on SPY. Now, let's revert back out to our 2-day chart and go to the Qs, which was up about 0.6%. So it was up a little over 0.5% today. And what we see going on the Qs is it crossed over going up on the 2-day chart around the 5th of October, has continued to move up steadily. We've got a nice trend line. We're well above that. We pushed through strongly through the ceiling that had been imposed since the Fed announcement back on the 17th. That's a 2-day candle on the 17th of September. So we have a strong up move in the Qs. If we go from the 2-day chart to the half-day chart, we again see a much stronger move up in the Qs than we do in the SPY or the IYY, the total market of the S&P 500. We see a crossover back on the 15th of October, and it's continued to steadily move up since then. As we talked about, when this occurred, we talked about a good position in a virtual trade going up around the afternoon of the 15th. That would have done you well over the last several days. And again, one of the easiest times to get into a market that's moving up or down is when the big chart's moving in either direction, up or down, and the small chart reverses, that is, it goes in the opposite direction, then it corrects and starts moving back in the direction of the big trend. When that happens, that's the little wave catching up with the big wave, and you want to always ride the big wave, but you want to get in at a good point. And when there's a backup on the small wave to get you into the big wave, that's the time to do it. So it worked out well on the Qs so far. So continue to monitor that. Hopefully you got in and you're riding that wave up. Okay, lastly, we're going to range out to our 2-day chart, and we're going to look at gold. We see there's a backing off in gold on the big 2-day chart. However, it's still an upward move on gold. We have a 3-day trend line still well above that. We have a crossover going up back on the 15th of September. But what do we really care about in gold? It's nice to know we're above the 2-day trend line. But what is our chart that's worked over and over and over again for gold? It has been the 4-hour chart. It crossed over going down this morning. Hopefully, if you were in gold, you had made your money and topped out last week. When we first saw the weakening on the 16th, it did cross over going down. That is confirmed now. And again, if you look back at how good our 2-day chart is, it has been good for several months, making nice virtual trades back on the 27th of, July, going up, going down on the 25th or so of, right at the 25th of September. And then, or is that August? Of August. And then an up move on the 16th of September, a down move around the 28th of September, an up move around the 5th of October, and now a down move around the 19th. Now, again, we like to use trend lines to help chart our growth. We like to make sure we get out when we've made a good profit. And we like to, when we see a backup and the market turning back in the same direction as the big chart, possibly get back in. You might say, wait a minute, how do you make money when the market goes down? Well, they're inverse funds. You can buy those virtually just as well as you can buy a fund going in the up direction like GLD. There's inverse funds on the gold, which make money in the opposite direction. How does that work? All you have to be concerned with is that it goes up when the market, the index, the commodity, whatever it is going down. Always pay attention. One thing we'll tell you about also when you take our courses and study, again, all online, available for free, you will learn that you always want to pay attention on any of these as to how liquid it is to get in and get out. That's the difference between the bid and the ask. How much is the difference between what it costs to buy the index and what does it cost to sell it? As long as that's just a few pennies, it's very liquid. If it's a few dimes or a few dollars, it's illiquid. You probably want to stay away from it. So again, when you're doing your practicing and your training, be cognizant of that. Pay attention to it. The more you do it, the more you will learn. And as you see your account go into the green, you know you're doing things right. Well, that is where we are on the charts as of today, as the market ends on Monday and goes into goes into Tuesday, the 20th of October. We very much appreciate you being with us. We hope that you started the week off with a bang and that you're ready to roll with things. We hope that you've already listened to our weekly review and forecast. If not, check it out. It was posted back on Sunday evening. You need to make sure you listen to that and you know what to expect in the market and where the weekly charts are and the daily charts. We always review those once a week over the weekend. We appreciate you being with us. Follow us on Facebook and Twitter. Give us some of your feedback and questions. And again, if you don't have our charts that we use, the charts that you see or that you hear me describe, whether you're listening to the video or on audio, those charts are available to you for free. All you have to do is email us. CW as in Charting Wealth, cw@chartingwealth.com. Ask for our charting layout. You can also ask for our free 15-minute course that will give you the down and dirty on how to read a stock chart. So you can really start following these charts with us and understanding and seeing what's really going on. Also, lots of great training at our website. Again, cw@chartingwealth.com. Thanks so much for joining us. We'll be back again tomorrow.